Are aging retail malls becoming the new heart of suburban communities? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. As aging retail malls in the United States continue to evolve, a new trend is emerging, transforming these spaces into mixed-use town centers. This strategy recalls a time when commercial districts were the heart and soul of a community. According to an article by Patricia Kirk and Ron Nyren on Urban Land, these mall-to-town center retrofits are especially popular in suburban areas, where pedestrian-friendly environments attract millennials raising families. In Cupertino, California, for example, The Rise is a mixed-use project intended to replace a defunct shopping mall near Apple Park. Owned by Hines, this development aims to create a pedestrian-friendly environment that blends retail, residential, and cultural elements. David McCullough, principal at McCullough, a landscaping architectural firm based in San Diego, describes this trend as a hugely successful iteration of retail that recreates downtown main streets. The transformation of malls into mixed-use spaces began in the early 2000s with the development of open-air malls. These malls featured walkable streets and front-store parking. Though they initially had a Disneyland-like quality, they remained shopping-only experiences and eventually lost popularity. The new generation of malls aims to offer more than just shopping, incorporating mobility options and 24/7 arts and cultural programming to keep spaces vibrant and active. One prime example of successful mall transformation is Mashpee Commons in Cape Cod. This project began in the mid-1980s, redeveloping a 1960s-era strip shopping center into a mixed-use community with housing, shops, and restaurants. Covering 140 acres, Mashpee Commons connects with surrounding neighborhoods through a walkable street grid. The project has generated over 1,000 jobs and significant tax revenue, which helps fund town services and infrastructure. Another significant redevelopment is the Belmar Shopping District in Lakewood, Colorado. This project transformed the defunct Villa Italia Mall into a vibrant community hub featuring retail, office, and residential spaces. The $1 billion redevelopment was a collaboration between Continuum Partners and the City of Lakewood, resulting in increased property values, tax revenue, and job creation. It has inspired further development in the Denver suburbs, including the long-closed Westminster Mall. The Eastern Hills Mall in Clarence, New York, is also undergoing a similar transformation. This 100-acre project is being redeveloped into a town center with residential units, retail, office space, and a hotel. The design aims to create vibrant, walkable neighborhoods connected to the larger community. However, developers face challenges, such as real estate agreements with anchor tenants and the need for phased development to maintain net operating income. Transforming malls into mixed-use centers is not without its challenges. Developers must navigate complex anchor tenant agreements, coordinate multiple property owners, and secure community buy-in. However, the demographic shift towards walkable communities, rise of e-commerce, and demand for mixed-use environments are driving this trend forward. The transformation of these once-defunct malls into community hubs suggests a promising future for suburban retail spaces. In a significant transaction in the multifamily sector, Related Companies has acquired a 292-unit apartment complex for $117 million. This acquisition highlights the ongoing interest and investment in the multifamily market, aligning with trends seen across North America. The deal was reported by Brian Bandel of the South Florida Business Journal, who noted that the buyer has connections with prominent sports teams, specifically the Miami Dolphins and Boston Celtics. The purchase of this apartment complex underscores the growing demand for residential rental properties, particularly in urban and suburban markets. This trend is mirrored in regions such as Kitchener-Waterloo, London, and Cambridge in Ontario, Canada, where there is a notable uptick in multifamily developments to accommodate a growing population. In these areas, developers are focusing on creating sustainable and community-oriented living spaces to attract a diverse range of tenants. Interestingly, the multifamily sector in the United States is also experiencing a robust recovery post-pandemic, with investors seeking stable returns amid economic uncertainties. This cross-border relevance highlights the similarities in real estate investment strategies between Canada and the United States, with both markets showing resilience and adaptability in the face of changing demographic and economic landscapes. Orion Real Estate Group has completed a significant transaction with the sale of the shops at Jupiter for $52.75 million. This news comes from a report by online staff D at the Boca Raton Tribune, dated August 26, 2025. The shops at Jupiter, a prominent retail property, has been a key asset in the area, attracting both local and regional shoppers. The sale of the shops at Jupiter reflects ongoing trends in the commercial real estate market, particularly in retail properties. As retail spaces continue to evolve, there is a noticeable shift towards properties that offer a mix of retail, dining, and entertainment options, aiming to create a more engaging consumer experience. This trend is evident in both the United States and Canada, where similar strategies are being employed in regions such as Kitchener-Waterloo, London, and Cambridge in Ontario. In Canada, particularly in the Kitchener-Waterloo, London, and Cambridge areas, there is an increasing focus on transforming traditional retail spaces into mixed-use developments. These projects aim to integrate retail with residential and office spaces, creating vibrant community hubs. This approach aligns with the shifts seen in the United States, where developers are repurposing retail properties to meet changing consumer demands and demographic trends. The cross-border relevance of these strategies is significant. In both Canada and the United States, there is a growing recognition of the need to adapt to e-commerce's rise and the demand for more experiential retail environments. The sale of the shops at Jupiter by Orion Real Estate Group underscores the value and potential of these transformed retail spaces in attracting investment and driving economic growth. As more investors look towards retail properties that offer diverse and engaging experiences, the market is likely to see continued interest in similar transactions. This trend highlights the importance of flexibility and innovation in commercial real estate, as property owners and developers strive to meet the evolving needs of consumers and communities. Commercial real estate is showing signs of recovery, according to Integra Realty Resources' latest report. The pandemic and interest rate shocks took a toll on the industry, but more markets are now in recovery mode rather than recession. The report highlights a trend where top-tier properties in prime locations are expected to deliver outsized returns, while older assets may trade at steeper discounts to replacement cost. This bifurcation in asset performance reflects a clear flight to quality, with capital and tenant demand prioritizing high-performing assets. In the industrial sector, demand remains strong, but speculative construction has slowed. This slowdown is providing price support for existing assets, although shifts in logistics patterns and consumer spending could impact values in less constricted markets. Despite some oversupply in major markets like Dallas-Fort Worth and Indianapolis, industrial remains healthy overall, with rent growth flattening in oversupplied areas, but staying positive in tight infill markets like San Jose, California, and Richmond, Virginia. The office market continues to face challenges, with elevated vacancy rates in urban cores such as San Francisco and Chicago. However, there are signs of stabilization in Sunbelt metros and other areas like Miami and Boise, Idaho. The demand is shifting towards high-quality assets, reinforcing the flight to quality trend. New construction in the office sector is limited, mostly to build-to-suit projects, life science, and medical offices. As the labor market changes, more employers are expected to call their workforce back to offices, indicating that the market is in the early stages of recovery. This insight into the commercial real estate market underscores the importance of quality and location in investment strategies moving forward. As the market continues to recover, investors and developers are likely to focus on assets that offer resilience and long-term stability. Gordon Ramsay, the celebrated British chef, has recently shed light on how commercial property owners amass wealth. In an article by Jing Pan, Ramsay expounds on the strategies that property owners use to grow their riches. The article, published on August 27, 2025, emphasizes that commercial real estate offers a lucrative avenue for wealth accumulation, particularly through strategic investments and leveraging assets. Ramsay highlights the importance of location, noting that prime real estate in bustling areas can yield substantial returns. He points out that successful property owners are adept at identifying undervalued assets and transforming them to meet market demands. This approach requires a keen understanding of market trends and consumer preferences, allowing owners to capitalize on opportunities for appreciation and rental income. Additionally, Ramsey underscores the significance of diversification in a commercial property portfolio. By investing in a mix of property types, such as retail, office, and multifamily units, owners can mitigate risks and enhance overall returns. This strategy aligns with the broader trend of creating mixed-use developments that cater to diverse consumer needs, as seen in recent transformations of traditional retail spaces into vibrant community hubs. The article also touches on the role of sustainable practices in enhancing property value. Ramsey suggests that incorporating eco-friendly features not only attracts tenants, but also boosts property appeal and long-term value. This insight is particularly relevant in today's market, where sustainability is becoming a key consideration for both investors and consumers. In conclusion, Ramsey's insights provide a compelling look at the strategies behind successful commercial property investment. By focusing on location, diversification, and sustainability, property owners can effectively grow their wealth and adapt to changing market dynamics. These principles are vital for anyone looking to thrive in the commercial real estate sector. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.